afternoon, everybody. Welcome to the Moving Markets Podcast. It is Monday, November 17th, 2025. The U.S. stock market just closed about 2 minutes ago, maybe 2.5 minutes ago. Um, I have not sent out, I want to make sure right at the very beginning of this presentation, everyone knows this was not like an accident of some sort. I have not sent out a signal newsletter yet today. Let me make sure you are seeing. Okay, let me make sure you're seeing the correct thing. I have not sent out a Signal newsletter yet today, and I am not going to send one today. I'll put something on Discord when I'm done recording here so that everybody knows it's actually not going to come out today. And I'll tell you why. I do not have a trade yet that I want to add for this week, either for the regular safe option strategies, weekly spread trade. I don't have something new I want to put out for the triple play trades yet, but I guarantee we will get some trades in place before the week is over. It may be later in the week on this particular week, and here's the reason why. As you can see, I'll give you some explanation now. As you can see, the Dow had a very rough day. Dow Jones Industrial Average down 557, the S&P down 60, the Nasdaq down 192. None of those were as bad as they were at their worst point in the trading session. However, it's not like they were way far off of that worst point. I believe the Dow at one point in time did get down over 700 points. And you can see that happened about an hour before the close. It managed to get back a little bit. It was flat to positive territory for more than the first half of the day. And then right around, let's call it a little after 12:30 Eastern time, it just started a very steady decline. It wasn't a sudden drop off the cliff like we sometimes get. It was just a very steady decline. Here's my take on it. And then you could look at the other two indexes and see essentially the same pattern. I don't know if they were exact. I don't watch every tick of the market every day. I know at one point in time, I think the Nasdaq was down as much as 300 points. It only finished off 192, but the Nasdaq spent a fair amount of time today. This was positive territory. Even some of this right here was actually positive territory. And then right around that same time, it just started to slide and only got a little bit of recovery in that last hour. It was really bad about an hour before the markets closed. Um, uh, you can't go on CNBC or Fox Business News and point to something real definitive about why the Dow was down. You could look at some articles that came out earlier in the day. There were, more concerns. Scott Bessent Bessent, I'm sorry, Hassett. Kevin Hassett made some comments last night or this morning about the AI could be causing some quiet time in the labor market. It's interesting because normally that might lend some uh, it might create more of a case for a rate cut when the Fed meets coming up in, I believe it's next week or two. No, it says, I'm sorry, it's a few weeks away. I'm forgetting. We're just halfway through November right now. In the first week of December, you've got the Fed meeting. And right now, you've got a very you've got more people leaning towards not having a rate cut than having a rate cut. Now, we are going to get some jobs data that's going to come out this week. However, it's going to be September data, not October data, because the government was shut down all through October, or excuse me, yeah, all through October. So you're not going to get up-to-date jobs data, even though it's always lagging information. It's not even going to be as current as it normally is. And when the last time Powell spoke, he threw a wet blanket on things and said, "There's no guarantee we're going to get a December rate cut because we still, too many uncertainties, especially with the government shutdown and the lack of data that we're going to get, and that is creating some panic." And I honestly thought that last week, and this is where I'm admitting where I was wrong. I honestly thought that last week, when we had that big, massive down day on Thursday, we got not nearly as bad a day on Friday. Things were only down a little bit on the Dow. The Nasdaq happened to finish in positive territory. But I thought we were going to bounce back pretty quickly. Now, based on what happened today, probably, I don't see a way we avoid on the Dow coming down and testing 46. I just don't see a way for that to happen. And here's part of the reason why. You've got Palo Alto Networks, you've got Nvidia both reporting in the next couple of days. And both of them, there's going to be a lot of focus on this whole AI story. Is the money that companies are spending on AI, is it paying off and justifying the valuations of these companies? That is what spooked people today, but that's what spooked people on Thursday. It's a continuation of this idea that we're at a bursting AI bubble. Now, there's two camps out there. There's one camp that thinks valuations are way too high. Companies are spending way too much money on AI, and the money they're spending is not going to produce the payoff they want or need. There is another camp that says, we're at the very beginning of AI. There's got to be a lot of spending up front. It's going to take a little bit of time to pay off, but it will pay off. And it does justify, even if the valuations on companies got a little bit high, it's still mostly justified. And things are going to be okay, and you don't have to panic and worry. So those are the two different camps. I am in the camp that says you've got to have the spending right now if you want to stay ahead in that game, if you want to beat China, if you want to beat other companies, you've got to spend money. And even if the spend looks exorbitant right now, that the payoff is going to come. You just got to trust that the payoff is going to come. And these valuations, while they might be a little bit on the high side, they're not overly exaggerated. Well, it's the former of those two camps that has won out these past 3 days, with the exception of Friday on the Nasdaq being a little bit to the upside. The Nasdaq, I think 22,500 is the bottom for the Nasdaq. I think it rebounded nicely on Friday, especially from how low it got early on. It came back and it actually finished a little bit positive, not up as high as it was at the end of the day. It came back down close, but I think this is where the Nasdaq is going to set up, unless Palo Alto Network and Nvidia really struggle to make the case when they report. And I believe they both report Wednesday after the close. Let me double check on that. I think they're both reporting Wednesday after the close, but let's get a quick peek. Yeah, there they are. The top two on Earnings Whisper. Um, Wednesday after the close, Nvidia and Palo Alto Network. And I think both of them are going to beat top line. I think both of them are going to beat bottom line. I think both of them are going to guide well. But if they, in their conference calls, cannot convince the investment community that the money they're spending on AI, now Nvidia specifically, they're going to talk about the Blackwell chip and what is the demand for the Blackwell chip. And there's going to be more to it than just the AI story. But there's going to have to be some comments, and there are going to be some questions about the spending on AI and how they see it paying off. If they don't convince investors with what they say, that the payoff is going to be there and that everything is going to be great and they're going to be fine. If they can't make a convincing argument, then as far as the Nasdaq goes and the S&P and the Dow, as far as all of them go, these close levels of support are simply not going to hold. The Nasdaq will come down here to 21,500. I would almost guarantee that's what's going to happen if they don't really have a convincing report. Nvidia will probably drop down. Let me clear these other marks. Sorry, get this out of the way. Nvidia will probably drop down at least to 170 if they're not convincing. Maybe they come down to 150. That would be the next really strong level of support, and that's just a visual support. I don't know right off the top of my head where the 50. Actually, let's take. I'm going to take a second and get the 50 and the 200-day moving averages in here. Let's add those indicators real quickly here. Let's get our moving average for the 50. Well, there's the 200. Let's add that. Yeah, it's down around 150. And actually, it doesn't even matter where the 50-day is. It's probably, I think the 50-day is probably, well, let's put it in anyways. I'll do it since I'm right here. Um, moving average, and let's add the 50. Let's give it a different color that we don't have on there already. Let's make it a yellow color. And there you go. Okay, so it's actually coming down and testing the 50-day moving average these last couple of days. If that breaks, if it breaks through the 50, then maybe there's no stop at 170. Maybe it comes right down to 150. And that's going to drag the entire Dow Jones down. That's going to drag the Nasdaq down. The S&P is going to come down. Everything's going to get crushed. So rather than send out a trade. Now, all of this leads to why I'm not sending out a trade today and probably not going to send out a trade tomorrow and probably not going to send out a trade on Wednesday. And then we'll see what happens on Thursday after these companies report. What I'm going to do is take the open trades that we have, specifically, we're going to get Palantir, Amazon, the SPY, and Nvidia. Tonight, I have to leave right after I make this recording. I'm not going to be able to do it right now, but well before the market opens tomorrow morning. So tonight or tomorrow morning, I am going to send out adjustments for all of these, and we're going to add some protective bear puts or bear put calendars to every one of these spreads so that if we really get it tanked down, we don't see a major dip in our portfolio. On the triple play side of things, I've got to adjust Palantir, Marvell, and Tesla. We rolled all of them out last week. Only Tesla, and I didn't see where it finished. Only Tesla was up today when everything else was down, but that could have changed. No, it looks like Tesla managed. Oh, wow. Tesla managed to stay a whole $4.57 to the upside. It was at one time up 11, 12, $13 a share today. But at least it managed to stay in positive territory, even though it looks like it dipped negative a little bit before that rebound. And it's up a little bit after market. Still, we're probably going to make adjustments to all of them to protect ourselves from further downside because any or all of them could get drugged down farther, and we don't want to take big losses on that. Um, that's going to be the focus for the next few days. So tonight, like I said, as soon as I'm done recording this, I'll get it posted online. I'll get it on Discord, and then I'm going to be running out the door. I'm at my house in southern Utah and have a whole bunch on my to-do list of things I've got to get done today. So I will be taking care of those things. But tonight or tomorrow morning, I will get adjustments out for all of those. Collar trades all look great. We're leaving them right where they're at. I'm actually excited about collar trades because they're all giving us an opportunity to probably leverage into more shares. But the story that Palo Alto Network and Nvidia paint on Wednesday is going to determine what this market is going to do, not just for the rest of this week, for the rest of this month and maybe into the first part of December until we get that rate cut decision. Once we get that rate cut decision, a rate cut could give us the late short Christmas rally that I'm hopeful for, leaving rates where they're at. A no move by the Federal Reserve is going to crush this market for the last part of the year. If the Fed does not give us a rate cut on December 10th, we will see I believe before the year is over, I think we'll have a serious drop in the markets. And I believe before the last day of this calendar year, we are going to give up pretty much all of the gains we had once we recovered completely. So this is important that I clarify what I want to say. We had the big drop based on the tariff, Liberation Day, the tariffs. And then from April, we got back to break even right about there. I don't think the Dow is going to finish in negative territory for the calendar year, but I think everything we've gained since we got back to break even around the early part of July, I think everything we have gained since then, we will give back and we will be a break even or ever so bearish market before the calendar year is over. Well, not bearish market. We'd have to come clear down here to like 42.5 on 42,500 on. I don't think we'll go down that far, but we will go back to where we were in the first couple months of this year. And on the Nasdaq, I don't know. On the Nasdaq, I think it could look even worse than that. The Nasdaq, I'm afraid, could really let me pull up the Nasdaq for the year to date. Um, if we don't get that rate, I mean, look at how much the Nasdaq has gained. So they didn't gain as much in the early part of the year, had the same dip on the tariff stuff, recovered back right about the same time, about July, early part of July is when they got it all back. There's been a lot more gain on the Nasdaq since then. We'll give every bit of that gain back, and the Nasdaq will be at or below 2,000 before the year is over if we don't get that rate cut. So we got to watch really, really closely what the Fed does in a few weeks from now, and we got to see what happens with the with Palo Alto Networks and Nvidia. Those are the now there are other companies reporting this week. We should go back here real quick. There are other companies reporting. I believe you've got Home Depot and Lowe's report this week. Those aren't things to ignore. Those aren't things to discard. They're not in the AI space, so I don't think what you see Lowe's and Home Depot do is going to be as big a deal. So you got Home Depot tomorrow morning before the markets open. Lowe's, I think, is it that afternoon or is it the next morning? Um, Maybe it's Wednesday morning. No, but you do have Target and TJ Maxx are reporting on Wednesday morning. Like I said, Palo Alto Network and Nvidia are the big ones to look at on Wednesday afternoon. And I know Lowe's is this week. Oh, Walmart on Thursday morning. Um, Again, not as much in the AI game. I thought Lowe's was this week. Maybe I'm wrong. Maybe they're coming up the early part of next week. But there's other earnings to look at. It's just the other big companies that are reporting. There's not as much of an AI story that is what spooked the markets Friday, not as much, or Thursday, not as much on Friday, and then today. So that's where we're at. I may do a podcast early tomorrow because I'm going to be driving home late tomorrow, and it may be hard for me to do one around the time the market closes. So, but do not plan on a new trade before Thursday morning for this week. And if we go a week without a trade, don't sweat it. We'll make up for it. We'll get some other good trades, but look for those adjustments tonight or tomorrow morning, and I'll be back on to talk more about what's going on and wrap up tomorrow. Wrap up what our adjustments are. Thanks, everyone. Have a great rest of your day. Bye bye.